So, welcome everyone to the second speech of the stream Investment and Portfolio Management Trends. Let me introduce Robert Zielinski and Pascal Schmidt. Their speech has the title Leverage Artificial Intelligence Using Trend Value, ESG Data to Reduce Risk and Increase Return. So, please, thank you very much.
Perfect. Can you guys hear me well? Yes. Yeah, perfect. Great. Yeah, thanks for the introduction. Leverage artificial intelligence using true value ESG data to reduce risk and increase returns. As mentioned, my name is Pascal Schmidt, ESG specialist at Factset, and I have the pleasure to walk you through the methodology of our award-winning real-time ESG data from True Value Labs, before then handing over to my colleague Robert Zielinski, who will go through the Vsg Activity Signal, which is basically a factor based on our award-winning ESG data that is then used in a multi-factor model. Let's jump right into it, and a bit of background for True Value Labs. Right? True Value Labs as a company was founded in 2013 by a group of technologists who really want to solve some of the key issues in the ESG data space. I've listed 4 of them down there on the slides: greenwashing, timeliness of ESG data, subjectivity, and transparency, just to name a few issues with ESG data today that most of you are probably very, very familiar with. Now, when you think of True Value Labs is really a pioneer in using artificial intelligence and, as such, machine learning and natural language processing to go through vast amounts of unstructured text to distill out positive and negative company behavior in the ESG space in real time. To have timely ESG data is, of course, helping to prevent negative surprises and also always stay on top positive ESG opportunities when it comes to investments. Now, when you think of all of the ESG relevant data on a company, all of the ESG relevant information on a company, and you think of it as a pyramid, then the top of that pyramid will be kind of the company disclosed information, right? Everything that the company is saying about themselves, everything you find in CSR reports, in filings, etc. Now, with the problems of this kind of data when it comes to greenwashing and timeliness, True Value Labs as a company decided to not take any company disclosed information into consideration and solely focus on the external stakeholder perspective, the external stakeholder information, right? So everything you can find in local, national, international news, NGO reports, trade journals, independent reports, etc. We cover 115,000 sources in 13 different languages in real time. And we're not only looking into the negative side of things, the controversies that companies are involved in, but we also try to find positive ESG behavior of companies. What we want to give our clients with that is really to compare the do versus say. Right? So from our perspective, it's not really about what the companies are saying about themselves, what they do in the ESG space. It's really about what are they actually doing. And that's what we try to distill out from all the sources that we cover. Now, how does our technology work? Right? So as mentioned, we cover 115,000 sources in 13 different languages. We cover 121,000 companies, of which 96,000 are private companies, 25K are public companies. And we start with analyzing these sources and we try to extract relevant information. The first information point that we try to find is, of course, the entity name, right? So we look for the name, we look for subsidiaries, we look for the products that the companies are selling within these unstructured texts, within the articles, to basically distill out first the entity that is being talked about within that specific article. In a second point, we then try to find all the ESG relevant data points. And for that, we have basically a whole network of 300,000 signals. These are signals like fracking, like GHG emissions, like gender equality, like labor issues, etc. And each of these signals has a whole lexicon of words that is basically indicating that that specific ESG topic is being talked about within that specific text for that specific entity that we found earlier, right? We then use the SASB framework that many of you are probably familiar with, Sustainable Accounting Standards Board. They've created 26 ESG subcategories to define ESG performance of companies, and we use that as our framework as well. And we basically assign those 300,000 signals to the 26 ESG SASB categories, and then we score based on sentiment analysis each of these articles for every company and for every ESG topic that we found in the text. Again, we have also 14 years of history, so that's of course then very useful in a quantitative use case that we talk about today. Now, what are the scores that we generate and that we also use then for the ESG activity signal, which is the factor that we use in many of our white papers that are available online? So the scores that we generate are 4 in number. I won't go through all of them because of the time we have today. But let me start on the very left with what we call our pulse score. The pulse score is the dashed line that you can see here. It looks a bit like a skyline. It's a very fast-moving indicator. As new ESG relevant information is coming into our system, we basically score that right away, and that score will adjust. It's a very fast-moving, very volatile indicator, right? It's mostly used by trading teams, etc. For the quant use case with maybe monthly rebalancing, you want to use a bit more of a a bit more of a smooth out value. So for that, we mostly use our insight score. The insight score is just the exponentially weighted moving average with a 6 months half-life, for those of you who are interested in the details, over the pulse score. So it's the solid line that you see here in the chart, and it's much more of an indication of longer-term ESG performance of a company. Our scores are between 0 and 100, 50 being neutral, and everything above 50 being positive, below 50 negative ESG performance, and the magnitude away from 50 is really telling you, how good or how bad is the company performing ESG-wise, right? So again, the insight score as a metric of polarity of long-term ESG performance from the external stakeholder perspective of companies. Now, the second metric that we use for our ESG activity signal is the third score here, which is our trailing 12 months volume score. And that is really defining the number of articles we found for each of the 26 SASB subcategories. And it's also a measure of robustness, right? Of course, the more articles we found, the more robust, or the more we trust basically our pulse and insight score that we found earlier. And the volume score is really a measure of information flow, a measure of attention from the external stakeholders, right? So I just want you to remember the insight score as a metric of polarity of ESG performance, long-term ESG performance, and the volume score as a measure of information flow, because these are the two components that make up our ESG activity signal that is used as a factor. So let's talk briefly about the construction of this ESG activity signal, right? So we're looking here at the developed Europe universe, MSCI Europe type universe, and I want to draw your attention to the 3 charts that we see here. On the very left is the insight rank, right? Remember, this is based on the insight score, so we take the whole universe, we quintile the universe, and you can see quite nicely that, over the time horizon from 2008 to 2021, companies that are, in the first quintile when it comes to the Insight ESG score, which is the long-term ESG performance, those ones are outperforming significantly the companies which are in the worst quintile and the 5th one when it comes to ESG performance, using our True Value Labs real-time ESG scores. Now, we combine that with the activity rank. Now, the activity rank has 2 components. Firstly, it's the trailing 12 months article volume that we just talked about. But we cannot take that metrics as it is, because that would naturally bias, towards companies with a lot of information flow. So we need to right-size it by some other, metric with respect to size or attention. We choose the trailing 12 months dollar trading volume to basically right-size this. And let's just give it a second. And that just perfect. Are we complete? Okay, we're going. Okay, let me just continue talking. I hope you can still hear me well. Perfect. So trailing 12 months article volume divided by trailing 12 months dollar trading volume makes up basically our activity rank. And also, if we quintile our whole universe for that activity rank, you can see that the distribution and the performance over time is doing quite well, and that the first quintile is significantly outperforming the last quintile here. It is important to remember, though, that the activity rank as is a completely unsigned metrics, right? It's just telling you how much information flow is a company getting with respect to ESG relevant information. So you need to combine the two, the inside rank, which is telling you, polarity, is it positive or negative ESG information, with in the center the activity rank, which is giving you a measure of information flow. And then you come up, when you sum the two, you come up with the ESG activity signal. And the two most important quintiles, of course, is the first one, the last one. And you can see that from a long-only perspective and the long-short perspective, that factor would be performing quite well. What are we trying to capture, with this bar and with this bar down here? So the first one, the first quintile, these are really companies which have a lot of information flow, and that information flow tends to be very positive, right? And we find through many, many research as well that our academic network has done that those companies tend to outperform the wider universe quite significantly. On the downside, these are companies with very little information flow, and if they get information flow, then that tends to be negative information flow, right? So what we're trying to capture with this last quintile are companies which get very little articles, but this slowly dripping in rumor stage information that is really slowly drawing down the stock price as it is, right? And these are the two groups we're trying to capture with this specific signal. Now, before handing over to my colleague who's gonna explain a bit how to incorporate this factor alongside some other factors in Factset's application, I just want to draw your attention to this performance chart, kind of looking into two different universes, the Russell 3000 and the MSCI Europe from 2008 to October 2021. And you can see, we look here at the top quintile, the bottom quintile, and the benchmark. And as mentioned before, from a long only or from a long short perspective, this would have been a very good factor to incorporate. In general, also, we find that the activity signal is quite uncorrelated to traditional factors like volume, volatility, size, quality, etc. And that with incorporating this ESG activity signal into your quant models, you would basically include information on risks and opportunities that you can usually not really find in the normal financial factors or financial metrics. And with that, let me hand over to Robert.
Thank you, Pascal. So in the next couple of minutes, I'll showcase how this ESG signal can be incorporated into a portfolio construction process. It will be a little quant tour, don't worry too much. I'll try to keep it as simple as possible. But what is the goal? The end goal is to achieve a portfolio with higher returns and a lower risk profile, of course. How did we do that? We used the Vsg Activity Signal, which Pascal presented a few minutes ago, and we combined it with some classical quantitative factors. We used Factset's quantitative factor library, which consists of several hundred individual factors. So what we see here on the right-hand side of the slide is just the factor blocks, starting with some reference data, country, industry, classifications, size buckets, followed by fundamental factors, the typical one, growth, value, solvency, efficiency. Some market factors we have used as well, which are more price sensitive, like technical indicators, momentum factors, volatility, and some alternative factors like insider activity, crowding data, corporate governance data, and lastly, VSG bit, which contains the ESG activity signal as well. So what have we done? We have used the MSCI Europe as a universe, which consists of around 430 securities as of yesterday. And we have divided that universe into 5 buckets. So based on VSG activity signal, securities with a very high score landed in bucket number 1, securities with a bit lower score in bucket number 2, and so forth. Bucket 5 contains securities with the lowest score. So we did that on a monthly basis. So a monthly rebalancing took place starting in 2008 and running until, I think, March 2022. So by doing that, we are able to measure the performance and the risk of each quintile. Now, as said before, we have not only used the ESG activity signal, we have combined it with several other ones like size, growth, technical indicators, alternative factors, and we have created a combined buying signal, which we named alpha plus ESG. And then again, we applied the same concept, creating 5 buckets to measure the performance and risk over time. So now let me jump into the FactSet application to showcase you how our clients use the data, and then we'll have a look at the backtesting results as well. So this is the FactSet terminal. I will start with the screening engine because this is the place where our clients start to do research, to create their own universe, and to pull different quantitative factors as well as ESG data. Our screening engine is capable to do research on equities, ETFs, debt instruments, funds, and in our example, we will go through an equity example. So let me just start with a new screen. And in our example, we have used the MSCI Europe. So I can just type in the MSCI Europe. It would return the constituents of the MSCI Europe. Our clients also use geographies, exchanges. You can do sector exclusions if you wish to do so, or you can even upload your own list of securities. So now the engine is just returning the around 430 securities of the MSCI Europe as of yesterday. And in the next step, we will add several quantitative factors. To do so, I can just click here and I can browse through different databases. So starting with pricing data, reference data, financial data, the typicals like the EBIT, sales you're looking for, broker estimates. We do integrate benchmark data as well. Maybe a quick outlook on the ESG data sets we integrate. So we also do integrate third-party ESG data provider. I'm not going to name it. You can read it, but you can also see that we have our true value ESG data in here. But coming back to my slides, we are looking for the quantitative factor library. So I can just open that, and you see the different factor blocks in here. So let's maybe start with size, just adding the market value of a security in US dollar. From the value block, we could add a book-to-price ratio. Drilling down a bit further, I can go into, let's say, the technical indicators using a drawdown ratio. I can choose the horizon I wish to use, let's say 63 days in this example. And lastly, just to showcase, we can add Vsg Activity Signal as well, the underlying data if I wish to do so. So as you can see, the engine is adding the columns in here. I can quickly sort by market value, for instance, and you can see like Nestle being the largest security in that universe. And then we have the corresponding data like the book to price, the 63-day drawdown ratio, and the ESG activity signal. So we have created a more extended version of that. That was just a quick outlook how our clients use the data, how they retrieve it. But now let's have a look at the backtesting results. So this takes place in a tool called Alpha Testing 4. And what we see in this diagram is the annualized return of the first bucket. So you remember we did 1 to 5, and we can see that our alpha ESG activity signal realized some 8% on an annual basis, which is pretty good. The TVL ESG activity signal on its own realized some 6% on an annual basis, not too bad, and volatility having a negative return in here. So again, this was just a top quintile. Let's now have a look at the spread return. What is that? We're taking the first bucket, the return, we're subtracting it from the fifth bucket, so basically plotting the difference over time. And again, we can see that our ESG activity signal is performing the best for that universe and that time horizon, of course. The ESG activity signal is the blue line, doing pretty good as well, and volatility having a negative spread return. We've seen that on the previous chart as well. So let's have a look at risk as well. So from a performance standpoint, we can say that the strategy is doing really good. So what this chart represents, it's kind of a three-dimensional. On the X we have the annualized volatility. On the y-axis, we have the annualized return. And each bubble represents the Sharpe ratio. So the bigger the bubble, the better. And basically, it's telling us how much risk are you willing to take for any extra unit of return. If we look at the value portfolio, we can see it has a quite high volatility and some limited return of around 4%, which is not really good. The Vsg Activity Signal on its own is doing much better, lower volatility, higher return. But the point of this chart is when you combine your Vsg Activity Signal with the alpha model, it results in the best performing portfolio in terms of returns, the lowest return, and therefore the highest Sharpe ratio. So just to summarize, in terms of returns and volatility, I think the strategy is doing really good here. Turnover is an important point because turnover measures on how often a portfolio manager needs to trade. So funds with a very high turnover ratio tend to come with high transaction costs, and you don't want to have that. So again, we are looking at the first bucket portfolio, and we can see that the TVL Vsg Activity Signal on its own has the second lowest turnover of all strategies here, which is really good. And then again, we can combine that with our alpha model, and it results in a reasonable turnover of around 64% here. Maybe a last chart. So this is a kind of a bubble chart. What we tried to test here is the following. We wanted to see if the strategy performs well throughout all sectors, or if a strategy is only performing well in specific sector or in specific areas. So on the X, we have used FactSet sector classifications ranging from business services, technology, utilities, and so forth. And on the Y-axis, we have our strategies. So each row represents one strategy, and a green bubble means a positive spread return, red is a negative spread return. So if we look at the value strategy, we can see that the value strategy did quite well in the energy sector, but it did quite badly in consumer services and in utilities, for example. And now let's have a look at our alpha plus ESG strategy, which is this row. You can see green bubbles throughout the row, which is great. This is exactly what we want to see. We have a little negative on business services. So generally speaking, you can use ESG data to improve the risk and return profile of a fund. This research was done on platform using the screening engine, the alpha testing engine, which basically leads me to my last slide. And this is about FactSet's quant vision. So data, of course, is key, but having unique data sets is, I think, more important. I've been talking about the TVL ESG data. I was talking about the FactSet quant library, which is unique to our clients. So, but what do you do with the data? You need to have the right applications. I've been showing the screening engine, the backtesting engine, where you can perform all these results. Also think about any optimizations or any attribution frameworks where you can use the data as well. FactSet also offers an end-to-end AI machine learning solution for quantitative investment workflows. We do partner with DataRobot in that space. If you're interested, let me know. And lastly, very important, FactSet tries to be as open as possible. So as I said, the research I conducted was on platform, but you could do the same analysis within an off-platform environment using a Python-based quantitative research environment. You can get all the data through APIs or data feeds. It's basically providing our clients the biggest flexibility in their daily business. So thank you very much for listening. I hope you enjoyed our presentation, and we are open for any questions.
Besides these numerical indicators, you also had, like, I think on one of those slides, events as well. So is it right? Could you comment a little bit on that?
Yes, for sure. So let me jump back a couple of slides to the slide that you meant, I think. So it's this one, right? So TrueValue Labs, has 4 key scores, and another product that we call Spotlight events. These are AI-generated events where we basically look at 3 different criteria. Big change in the pulse score, positive or negative. A big change in the score. A lot of volume on a specific event, right? So if many different outlets talk about the same topic, we cluster together information and create, basically group it together and can tell you how many outlets over how many days have talked about a topic. And that's also the 3rd criteria, right? How many days it's actually been in, all these sources that we analyze. And then we create a spotlight event to basically tell you on a timeline, what are the most important positive and negative events that have happened for a company within the ESG space, right? And obviously, because, we cover 115,000 sources in 13 different languages, so it's saving you incredible amount of time to really, see on a nice timeline. Also, with the size of the bullets, you can kind of see how much attention has this specific topic gotten from the external stakeholder perspective, and this is an indication of how relevant then that topic is for the company. Did that answer the question?
Yeah, absolutely.
Perfect.
And then just maybe a follow-up. So the user is supposed to somehow instead of reading many articles, would have an event and read about this event, or 1 or 2 articles. Is that the idea?
Exactly. So on our platform, you actually have access to all the 115,000 sources that we analyze. If it's an ESG relevant article that has been tagged to that specific company, you'll be able to see all articles. But of course, because for some companies that could be a lot, we cluster this together, and you can also see only the spotlight events, right? And they also, come with a score to show you how relevant the event was, how statistically significant it was compared to the overall information flow that companies are getting. Yeah, our clients, as I mentioned, we cover around 96,000 private companies, and that's also really unique, right? Because it's very hard to get ESG relevant information on private companies, and to have such a tool is insanely powerful. Yeah.
Thank you.
Please.
How many stories do you have per company? Especially, so if you go to the private companies, the ESG is a fraction of the total stories that are coming out.
Exactly.
So how many stories for those private companies do you actually have? And then if you start filtering those stories by materiality,
yes,
it's even fewer. So could you comment on the average of number of stories that you have for private companies or in general?
Yeah, it really depends on the size of the companies and also how much information flow that company is getting, right? Sometimes we have 3 different levels where we classify companies into low, medium, and high volume. Low volume means we have found less than 5 articles in the trailing 12 months. Now, we say, if it's a low volume company, that you should take, those scores with, some caution. But then many times when it comes to private companies, it's already super valuable to have the underlying articles to make your own assessment, right? Because many times there might be a story which doesn't make mainstream media, and that you would miss if you wouldn't have technology helping you out basically as a safety net to distill out ESG relevant information for those smaller companies, right? So obviously the listed ones usually tend to have more information flow, but we have many clients who leverage TrueValue Labs, as a safety net to do, private company due diligence, etc., M&A analysis and things, just because, yeah, usually you find no information on them, and now you find, a couple of ESG relevant articles that can be helpful for your own evaluation. But to one of the points that you mentioned, if I may say as well, of course, the information flow that different SASB categories are getting are a great indicator of how material these topics are, or how material they will get in the future for companies, right? So just this measure of information flow is a very unique data point if you want to do ESG analysis. Any other questions?
Thank you very much.
Perfect. Thanks for your time.
So thank you very much, Robert, and I'm sorry,
Pascal.
Sorry. And if you still have some question for them, you can find them at their booth. And thank you very much for attending this speech.